Thank you very much, Professor Hatekar. First of all, I would like to congratulate the National Institute of Securities Market and the University of Mumbai to put out a program pretty innovative and absolutely relevant in current times. I think today, in the field of financial markets, or in any of the finance field, or in any other field, like Mr. Sinha was talking about other areas also, one cannot live without data. One cannot live without data crunching. But before I get to what the central banks do, see, I'm going to take exactly 20 minutes. I'm not going to talk for more than 20 minutes. If there are questions, fine. We can interact for about 5 minutes because I need to go back to my office by 1 o'clock. I need to hit my office. Now, let me tell you, whatever data that you have, you may do a lot of data crunching. Ultimately, I think the hard disk up above here, that's going to come to your rescue. The judgment call is the most important that any one of us need to exercise. The data will lead you through a path. The data will show you some options, but ultimately, selecting the right option is going to be a judgment call. You could still be wrong with all the data at your command. And this is what we realize in the central bank. Today, central banks are the biggest data crunching machines across the entire world. And the Reserve Bank of India is no exception to this. I'm just going to give you a flavor of where all we employ pretty high frequency data, big time series data, sample surveys, our judgments. I'm just going to give a flavor of that. With all that, let me tell you, we can go wrong and we do go wrong. You would have seen in our monetary policy reports a fan chart. A fan chart is a novelty these days. I would not call it as a novelty, it's an insurance for the central bank. It's an insurance for the central bank. It doesn't say with 100% accuracy where the inflation is going to be in the next 3 months' time. It gives you a probabilistic idea of where the insurance is going to be. The moment I say I'm using a probabilistic model, I'm saying that while there is a 75% chance, while there is a 90% chance that the inflation in the country will be around 4.5% in the next 3 months, I have a very convenient escape route that 25% of the chance that it will not be somewhere close to that. That's how the fan charts come into use. So the very concept of fan charts is an embodiment of data usage, but at the same time, a huge amount of overlay of common sense judgment which is involved. Without that, perhaps, I think a central bank will just not be able to function at all. When we do our monetary policy, the monetary policy is a tremendous trade-off between growth and inflation. You would have seen from day before yesterday onwards, the bond market in India has been rallying. For what reason? I have never understood the reason at all. They say a new governor is coming, so the bond market is rallying. When this new governor came, when Dr. Raghuram Rajan took over, the bond markets rallied. The exchange in markets rallied. Now he is going, and a new governor is supposed to be coming. Nobody knows who is a new governor, but some names keep getting flashed, and the bond markets move up. And the explanation which is given is that the new governor is going to be dovish. I don't know. Dr. Raghuram Rajan always says, don't compare me ever with a bird at all. I am Raghuram Rajan. I am not a dove. I am not a hawk. I am just Raghuram Rajan, a human being. Now, this is what the market does. The point that I am trying to drive home is the trade-off between growth and inflation that a central bank does is a pretty difficult exercise. It's easier said than done. when you are trying to address an inflation issue, it's not a linear path that the central bank chalks out in single-minded pursuit of inflation. If you are going to be in single-minded pursuit of inflation, you are going to kill growth in the country. And central bankers are not out on that path at all. And in the process of growth inflation dynamics, our monetary policy crunches lots and lots of data. We do an inflation expectation survey. There was a good, point made by one of the previous speakers as to how sampling is not being employed and how we do 100% data crunching. Let me tell you, in the central bank environment, we cannot do 100% data crunching at all. Sampling has to be done. When I talk about inflation expectation survey, the inflation expectation survey can pick up at best about 10,000 households, 20,000 households. You can't go to all the houses in this country and try to find out the reasoning whether the prices of brinjal would go up, prices of bhendi would come down. You're not going to do that. So after all, when we try collecting this data, it's going to be a sample survey. The sample survey, the judgment call is involved whether I am going to do a systematic sampling or a purposive sampling or a stratified random sampling. Well, every sampling methodology has its own advantage, has its own drawbacks. But then we have to make a very careful calibration of the advantages and the drawbacks of this survey, learn by experience, and try to arrive at an inflation expectations of the population. But let me tell you, after all this, you know what is the inflation expectation survey in India saying? Till about 2 months back, people are expecting 12% inflation in India. Till about 5 months back, people are expecting 16% inflation in India. Whereas the ground level inflation, as far as the CPI is concerned, is still hovering around 4.5 to 5. The data which got released day for yesterday, it was 5.7. Today we are going to have the wholesale price index data, and the data is going to be even lower. But then the inflation expectation survey, when you do, after all, I am not going to take a basket that the central bank is going to take. If somebody is going to come and ask me, what is going to be the inflation expectations next month, I am going to go by a basket of goods that I am going to put to use, and I am not going to go beyond that at all. So when I say 11%, we go by that 11%, we attach value to that 11%. So where such a completely an odd number helps the central bank is that it sets a direction of the inflation path, although it may not give us the exact inflation, it gives us an idea about the direction of the inflation path. If there is going to be a point of inflection in the inflation path, we get to know it well in advance, while the inflation expectation survey would point out it has reached 14, it has come back to 13 and 12. You will find that the actual inflation also runs on a parallel track. It might go from 4 to 5 and will come back to 4. That's where it helps us. Now, when we do these surveys today, our surveys are dependent on a number of data points collected over a high frequency and a time series analysis. For example, the capacity utilization survey that we do, we capture the information from at least about 10,000 companies. We are happy that about 10,000 companies are happy to respond to the central bank. Mind you, they don't get anything by responding to the central bank. But then our data points are becoming robust, more and more robust. The way we crunch these data points is going to be pretty important. Today, when we get back to the controversy of GDP numbers in India, whether the GDP numbers at 7.9% for the last quarter or 7.6% for the year 2015-16 are robust, accurate, or reflective of what is happening at the ground level, let me assure you that the Central Statistical Organization when they went into a new GDP number series, which is a gross value added, they are completely in line with the international best practices. So what we are trying to do, I mean, the Central Statistical Organization is an organization completely different from the Reserve Bank of India. It has nothing to do with the Reserve Bank of India. We ourselves at the Reserve Bank of India we are yet to completely understand what is happening there. But the broad idea about what the Central Statistical Organization is doing is that they have actually fallen in line with the international best practices, and our numbers are perhaps closer to reality now. Perhaps we are not capturing some of those numbers, what we are capturing some time back, so today the numbers are closer to reality. The Ministry of Corporate Affairs database, which spans across almost about 500,000 companies in the country, it's a kind of a database which is getting employed today in comparison to the sample survey that the Reserve Bank was doing, which was covering hardly about 4,000 to 5,000 companies. So certainly we can say the Ministry of Corporate Affairs database is going to be a more broad-based kind of a database on which the Ministry of Corporate Affairs is relying on, the Central Statistical Organization is relying on, and in turn the Reserve Bank is relying on. The growth numbers not only depend upon the corporate data, because a good part of the data is derived from agriculture, which is again monsoon based, and the monsoon numbers are again derived by the meteorological department on the basis of employing several statistical techniques. Thankfully, we can see that these statistical techniques are getting more and more accurate over a period of time, because the number of parameters that they employ are in excess of about 180 today. Much less scientific work gets into monsoon forecast, much more statistical work gets into monsoon forecast today. That's a fact of life. But thankfully, if it is raining today, the statistics that the monsoon guys are crunching, they turned out to be correct. So perhaps basing our monetary policy on the monsoon, on the agriculture, on the rural demand, is quite a bit of statistical reliance that the central bank has come to establish on the entire gamut of statistics, not relating just to the financial sector, but across the whole gamut of the country. This is the point that I wanted to make. Now, this is in short about the monetary policy. If you come to the exchange rate policy, where the Reserve Bank intervenes in the foreign exchange market on a moment-to-moment basis, day in and day out, a good lot of the judgment is dependent upon the data that we collect, which is a high-frequency data. Thankfully, the international regulators today, in the aftermath of the global financial crisis, have enjoined upon the local central banks to establish a trade repository of the market transactions which take place. This trade repository is nothing but capturing each and every transaction spanning across a variety of fields, which is being communicated across to the central bank on a moment-to-moment basis. So we have a surveillance system like what Mr. Ashish Chauhan was saying. We have a surveillance system which actually captures the data from the money market, from the foreign exchange market, from the government bond market on a moment-to-moment basis to understand the trends which are coming in, the positions which are being taken by the individual bank and the authorized dealer participants in the foreign exchange market. And we understand the extent of speculation, which is speculative activity, which is gathering strength in the market vis-a-vis the real sector activity. And that gives us a clue to how the volatility is going to move in the foreign exchange market. While we put out a general statement about our exchange rate policy as addressing the volatility, if you ask me what is the definition of this volatility, I will never be able to define this at all. Let me tell you, with all the judgment, with all the data that we have at our behest, at our command, to determine what the volatility in the foreign exchange market today is, it's ultimately the top management call in the Reserve Bank of India which decides whether we should intervene in the market or we should not intervene, or we should intervene now or we should intervene 1 hour later. So the point that I'm again trying to emphasize is a lot of data crunching is being done when it comes to the exchange rate policy, when it comes to the exports, when it comes to imports, when it comes to balance of payments, when it comes to trade deficit, when it comes to the capital flows, when it comes to FII, ECB flows, non-resident Indian deposits, all this data gets captured, but ultimately the judgment is involved. In the morning, I was talking to somebody, and I was mentioning another area where we are tracking very actively through the high-frequency data is the non-deliverable forward market, which operates abroad, and its impact on the currency futures market in India, and in turn, its impact on the OTC forex market in India. The three are getting intertwined, interlinked, simply because of the fact that the regulatory regime which was actually separating the OTC market from the currency futures market is actually coalescing today, is actually getting closer and closer today. While in the currency futures market, you can operate without an underlying documentary evidence of having a need for foreign exchange to be sold or foreign exchange to be bought, the OTC foreign exchange market also is now coming up with that kind of a regime. And beyond a particular point, even in the currency futures market, we are wanting the exchanges to establish the need for currency to be sold or the need for the currency to be bought. So this is where a fusion between these two markets is establishing the interconnectedness between these markets, and we are trying to study the high-frequency data both in the OTC market as well as in the currency futures market as to which market is tailing the other market on a moment-to-moment basis. While I will not be able to give out the conclusions right now for two reasons. Number one, we are not finished concluding that particular research, and number two, for confidentiality reasons, I can very well say the fact remains today that the OTC market of foreign exchange is not operating in an island, it's not operating in an oasis. It's getting impacted on a regular basis by what is happening in the NDF market and in the currency futures market. So we need to be quite well prepared, be alert to understand these markets through data crunching if our exchange rate policy has to play its role of addressing the market volatility. Data crunching is becoming exceedingly important. Come to the third important policy where the Reserve Bank's role is going to get minimal over a period of time. That's a debt management policy. There is a talk that the entire government debt management is going to go out of RBI. It's going to be done by the Government of India through establishing a debt management agency. Now, this debt management has become a very critical function today, with the government wanting to borrow 6 lakh crores every year. Mind you, this figure was in the region of about 1,80,000 crores not more than 5 years back, about 6 years back. Today, this figure has actually bloated up almost about 5 times to a level of 6 lakh crore. And when an entity wants to enter the market to borrow 6 lakh crore, the debt manager has to do a tremendous amount of exercise in terms of timing the flotation of this debt in the market. When you talk about the timing of the flotation of the debt, he has to keep it in his mind, the objective of trying to elongate the overall debt profile of the country. We all know that countries in Europe, particularly Greece, and now if you look at Portugal, Italy, Spain, they are all looking at the entire debt portfolio of their sovereign debt portfolio of their country And Greece had a debt to GDP ratio of close to about 140%. Today also, even after the IMF program is in place, the Greece debt to GDP ratio is about 125%. Thankfully, in India, if you look at the sovereign debt to GDP ratio, it is just about 60%. We can't heave a sigh of relief looking at the percentages. These percentages hide actually much more than what it reveals. We are not talking about the public sector debt. We are not talking about the state government debt. So if you take into account all that, the Indian debt to GDP ratio will still be almost about 80%, which is not bad. But then the point that I am trying to make here is, when you talk about the debt management function of the Reserve Bank of India, you have to look at the entire maturity profile of the debt. As the debt portfolio gets built up, you can't run a huge rollover risk on the portfolio, where every year almost about 4 lakh crores is going to fall due for rollover. That is simply a figure that we cannot manage at all. If we can have about one-fifth of the debt which is getting rolled over, it becomes a manageable proposition. This is where elongating the debt profile becomes very important. Minimizing the cost of debt is another very important thing. If you look at the cost of debt, the 10-year debt today in India costs roughly about 7.35%. The governor has always been talking about the real rate of return in the country. He talks about a real rate of return for the investors at around 1.5 to 2%. If we can maintain this real rate, which means the interest rates in the system are kept at a level where there is an inflation neutralization and the real investor is able to get a return of about 1.5 to 2%, you can see more of savings accruing into the financial assets rather than physical assets like gold. For a central banker in India, he faces a different problem compared to the central bankers outside, because we are all wedded to gold. We buy gold at the trigger of at the drop of a hat. Any festival, any Akshaya Tritiya, we move in to the gold shop. So this is where the central banker owes a responsibility to the country to wean the population away from the physical assets to the financial assets, and this involves very careful inflation management and debt management, which is going to be a very important thing as far as the central banker is concerned. Let me close with a last thing about the trade repository, which is a real fund of data for the central bank today, where the government securities market turns over every day close to about 1,50,000 crores. In fact, yesterday was a record day in the government securities market, where it turned over 1,51,000 crores. I mean, beating the previous record of 1,41,000 crores, which was recorded about 6 months back. The foreign exchange market, which records a turnover of close to about $55 billion. Now, capturing every single transaction, capturing every transaction party by party, calibrating the positions of the party, noting the trends of the market, looking at the accumulation of the positions is a huge job that a surveillance system and a central bank would have to do, failure of where would cost the central bank very heavily in terms of reputational risk, and would also cost the country heavily in terms of jeopardizing the financial stability of the country. Now, this is in brief about the market intervention policy. Mr. Chauhan talked about the algo trading. He talked about the high frequency trading. Today, it's not only in the radars of RBI, it's in the radars of the entire international coordinators of the central banks. The Bank for International Settlement has put in place a working group which is looking at the algo trading, which is looking at the high frequency trading, which is looking at what are the ills which could be brought about by these kinds of trading procedures. Of course, we can't shun the technology. But then, we are now slowly going towards an era, here the philosophy enters and the financial market actually takes a back seat. Are the financial markets in existence to serve the real sector? Or are they in the country only to live on their own? This is a question that we need to constantly ask ourselves. When we ask this question, we realize that if there are types and innovative trading techniques are entering the market, which could improve the market price discovery mechanism, but at the same time, it could cause the financial stability very heavily, I think we need to have a rethink. And this is where the international regulators, including the Bank for International Settlements, are looking at it very, very carefully. Let me close with a line saying that, the data crunching has become a very big business in the central bank. We employ about 150 statisticians whose only job is to crunch the data, come out with conclusions. The conclusions could be absolutely be absurd. We don't bother about it at all. But then the guys have to actually crunch the data and come out with conclusions which will be useful for the policy making and which will be used for at least a constructive kind of a policy making. So all of the students who are sitting here, I can only tell that the data crunching, the quantitative techniques is going to have a great future. Thank you very much.